G'day folks, Jim here from Forex. It is Saturday the 20th of February. Well, as we thought might be the case last week, sterling has been the standout star really over the last few days, rising above 140 for the first time since April 2018 on Friday, after some strong UK flash PMI data, and looking as though it's got further to run against both the US dollar and the euro in response to the UK reopening, and also to the US stimulus package, or the forthcoming stimulus package, which I think is going to see a generally weaker dollar all round. Elsewhere, the Aussie and the Kiwi had a strong down Friday amidst general US dollar weakness, although the EU majors and the yen remain choppy and within their previous ranges. The major stock markets had a sideways and choppy week at or near their all-time highs. Although the Russell index does continue to power ahead, and we're going to have a quick look at the chart there. Base metals, they're in strong demand, but gold is lagging badly as traders appear to be rotating out of gold and into Bitcoin as an alternative asset, which has come along very strongly as an alternative in the last couple of months. Elsewhere in the commodities section, oil reached, West Texas Intermediate reached $62 a barrel last week, but ended Friday back below 59, and looks a little bit heavy as we head into the new week. Looking ahead, the main interest in the coming week is going to be in the rollout of the vaccine program, while the calendar will incorporate the UK unemployment and the EU CPI on Tuesday, the RBNZ meeting, and Fed Chairman Jay Powell testifying to Congress on Wednesday. The US durable goods orders are due on Thursday, while the US personal income, consumption and expenditure figures are due on Friday. So it's going to be a pretty busy week. And without further ado, we'll go and have a look at the charts, starting quickly with the dollar index as usual. Actually, before we go to the charts, I'll just have a quick look at the trend table here. And as we can see, Sterling looks very constructive, as does the Aussie at the moment. The Euro and Dollar Swiss are a bit more conflicted. They're not really doing an awful lot. And Dollar Yen looks as though it could be a bit toppish, but I'm not really sure what's going to happen there. The US yields keep heading higher, so that's like to be supportive of Dollar Yen. But at the moment, the charts are looking a little bit toppy. The stock markets, they're looking a little bit more neutral at the beginning of the week, and might have seen an interim high as yields do head higher, particularly in the long end, where yields seem to be moving up strongly in anticipation of inflation later in the year. Gold looks heavy in the longer term. Silver's pretty neutral. Oil looks heavy and maybe topping out just here as it comes into resistance. On the crosses, the Aussie looks very strong against both the yen and the euro. Euro-Aussie looks heavy, showing Aussie strength. And I still like euro sterling lower, and we'll go and have a look at the charts there in a minute. So now we're going to have a quick look at the dollar index, as I just said. Okay, we won't spend too long on the dollar index. As you can see, it's tracking sideways really between 90 and 91.5, and it looks as though it could continue to do so. The dailies look pretty neutral, and this basically underlines the indecision really in the euro, which makes up by far the greatest weighting of the dollar index. I think eventually we're probably going to see the dollar head lower towards this support down here, just above 89, and if we go below that, then there's not much, as I'll show you in a second on the weeklies, not much above 88.5. One thing we should be looking out for here are these yields in the States. The 10 years back at 1.3, and the 30-year last week went back above 2% for the first time in a while. And if those yields keep heading higher, that might prove somewhat dollar supportive. But in the longer term, I think the economic support package that's going to come through from the new Biden administration is going to see so much cash in the market that it'll probably undermine the dollar to a certain extent, and I do think we're probably going to head lower. On the top side, as I say, this 91.10 last week's highs resistance, as is the 100-day moving average at 91.50. This might be a bit of a, let me just blow this up a little bit. This might be a bit of a head and shoulders here with a neckline here. Then that could take us back down to this 89.25 low. So it's worth keeping an eye out for. The weeklies actually seem to be turning a little bit higher, so I'm not getting overly bearish down here, and I just think we're probably going to track sideways, and there's better things to look at. So without further ado, we'll go to the EU majors. Actually, I'll start off with sterling. And as we said last week, sterling really looks pretty good. Having broken away from this neckline, I think sterling can go an awful lot higher potentially over time. Now, we reached 140 and basically reached this peak here going back to when middle of 2018, I think, as I said earlier. Now, if we go above this sort of 140.30 area, there's not an awful lot to stop us going back up to 143.80 or so, which takes us back up to this April high. And if we break above that, well, in that case, we're really on our way, motoring higher. And this is the, I think this is the Brexit day trade up here. Yeah, so June 2016. So that'll be worth looking out for. That's 150. It's a long way off yet. I do think that's probably the direction of it. The weeklies are still pointing higher. The monthlies too. The monthly indicators, they look positive, and I think we're probably heading towards this 150 level, albeit it's going to take a while to get there. As far as Monday, the 4-hour charts look positive. They may be getting a little overbought, so we might see a bit of a pullback. But I definitely think that buying dips probably towards this high here, if we see it to 139.5, is probably the go on the day. The daily charts building up a degree of positive momentum as well. So overall, yes, I think buy sterling. And you can do it probably against the dollar, but also I think against the euro, which we'll go and have a look at now. Okay, so last week sterling, as we said in the previous video, finished just above the 87.40, which was then this support level here. And we thought it was going to break that and head lower, which indeed it has. And it's finished on its lows once again this week, with the 4-hour indicators pointing lower. I think there's further downside to come. And really the next level of support, as we can see here, will be down around this level here, which is this previous low way back when. That's what 86.15 or so. And then back down here, which as our long held target, down around 85.65, 70. So I think I'd stay short the cross. Those are the dailies. If we look at the weeklies as well, they're beginning to point lower. So I do think staying short is the way to go. Actually, just going back to sterling very briefly, one thing to look at on a cable chart is this is the monthly Ichimoku cloud. Now, currently the top of the cloud is at 142.60, but it's coming down quite rapidly, and the top of the cloud in March will be around about 140.60, more or less where we are now. So a break of this level at the end of February or this level at the end of March will give me added confidence to the upside for sterling. And until then, we are going to see resistance here at this sort of 142. It's a long way off yet, 142.70. But if we do get there, I think sterling's going to find it difficult this month. But if we're up there in March, then I think that's going to propel new buying and take us to further new highs. Okay, so now we'll go and have a quick look at euro, and here we have a daily chart, and as you can see, it's very choppy. It's trading between the 100-day moving average, the blue line, the 55-day moving average, the brown line. I'm not really got any particular axe to grind here. Charts are flat, the daily indicators are flat. 4 hours not showing us an awful lot. We may see some euro strength on Monday, but I'm a bit ambivalent about it really, and I think there are better things to trade. If you want to trade the euro, I would be short euro, long sterling, so short the cross basically. So moving forward to dollar yen, and dollar yen briefly touched 106.20 here the other day, the downtrend resistance, 12-month downtrend resistance. And it came back, and it's actually finished the week back below the 200-day moving average. Now, and the indicators possibly looking a little bit toppish as well on the dailies. So we could see some further weakness. If we do see US bond yields head higher, though, I think the downside for dollar yen will be fairly limited, and we could see another move back to the top side. There are better things to trade at the moment. If you want to be In the yen, I think look at the crosses. Being long Aussie, short yen, I think is probably the best bet. And we'll go and have a quick look at the Aussie against the US dollar. So here we are, the Aussie against the US dollar. Now that had a strong day on Friday, taking out these previous highs, going back here and here. It's around just above 78. And we've moved up to 78.70, pretty much closing on the highs. And with the 4-hour charts looking pretty positive. The dailies are not far behind. They're beginning to wind up. They look looking fairly constructive. And I suspect now that we may be in for a test of higher ground, where the resistance, if we go further out, this is the weeklies. Now we need to go all the way back to here to March 2018, and 79, just above 79 is where the mark where we need to look out for. 79, 10, 15 area. That's going to be decent resistance. The weeklies look somewhat overbought. They may be turning a little bit lower. I'm not really sure. This bit inconclusive. But I suspect we're going to see a move towards 79, 10, 15. And if we get above there, then we're probably heading towards 80 and potentially back even to this sort of 81.25 area. That's a long way off at this stage. But having said that, I think buying dips is the way to go. The monthly charts also look positive as far as the momentum indicators are concerned. So as I say, if we can take out this level here just above 79, then it's back up here to sort of 81.25 and potentially higher further down the track during the year. We have to wait and see on that one. One of the things I do like is also, as I just said, is Aussie yen. We'll go and have a look at that. Okay, so here we have a daily Aussie yen chart. And I think I said a couple of weeks ago that I kind of liked it heading towards 84. And I haven't really changed my mind there. There'll be some resistance at this previous high back here. That's well, 83.75, somewhere around there, 80, 83, 85. I think there will be decent resistance there. But the daily indicators look constructive to me. The weeklies, I'm not doing an awful lot, but potentially pointing higher. Now we are up against resistance here, and it may take a while to push on through. But I think if we are going to see a weaker US dollar, and possibly a combination of that and some higher yields, Aussie yen is going to be a major beneficiary here. So when I say higher yields, I mean higher US yields. That won't hurt dollar yen at all. It'll weaken the yen, so the Aussie yen might appreciate on both legs. So it's worth watching out for. Okay, we'll just move quickly along to the stock markets. They're looking a little bit toppish to me. Now, there's no reason at this stage to suggest that stock markets are going to come off a great deal. We've got decent support here. It's sort of 38.80. If we do go below there, then we might head back towards the sort of lows down around here. And I don't think that'll necessarily be a bad thing, because the charts are becoming overbought in the longer term, and stocks are probably getting a bit frothy. The dailies also look as though they could be turning a little bit lower, while the weeklies actually are very overbought. And as I've said before, we've got this bearish divergence. So a bit of a correction would not really surprise me. The interesting thing, though, as far as the US indices is concerned, is this index here. Now, this is a weekly chart of the Russell 2000 smaller companies index, and it's just powering to new all-time highs. It seems vastly overdone to me, and it's becoming quite overbought. So it wouldn't surprise me at all to see a correction there. But it's been a real leader, and maybe it's telling us something about the bigger market. We have to wait and see on that, but in the meantime, I'm a little bit ambivalent about being long the S&P at this and the Dow at current levels. As far as the Aussie market's concerned, the ASX had a bit of a shocker on Friday. It's come down here very sharply, traded sideways through Europe and the US into the weekend, sitting on this support here, 38.2% of this move up. Now, the momentum indicators are this is just a 1 hour chart, so that doesn't really mean much, but they're showing a little bit of support perhaps. If we go further out, the 4 hours are beginning to point lower. The dailies are still fairly neutral, and I don't think it hurts to have a bit of a correction here, and it may be that we just continue in this channel. Good uptrend support coming in here. Currently at around, where's this, sort of 66, call it 6600, but the dailies are they're pretty flat, Possibly the RSI is pointing a bit lower, so further weakness would not surprise me early in the week. But longer term, I still kind of like the idea of buying dips in the ASX. And the weeklies are flattening out a little bit, possibly suggesting some mild weakness. But the monthly charts, if we look into the longer distance, they're beginning to show some positive momentum, and I think buying dips in the ASX is probably the way to go. Moving along briefly to gold, which I'm avoiding because there seems to be other things at play here, including the rotation out of gold and possibly into Bitcoin. And we're really on this support pivot here. 1765, that was resistance a while ago, but when it broke, when gold broke above there, went up very strongly, came back, tested it, it held, we moved up again, and it's come back and tested it again. I have to say the dailies look heavy, and so do the weeklies. So I suspect we are going to see a deeper test of the downside, and that comes despite a weaker US dollar. The other thing with gold that I think might be in play is this technical support here at 1747. Now this is the gold-silver ratio, a daily chart of the gold-silver ratio. If we go, say, below this sort of 1740 level, I think we're going to see fresh selling of gold, buying of silver. Now that's it's not something a lot of people look at, but it is worth keeping an eye on, because I think if we do go below here, it's going to put further pressure on the gold price. And but that's enough of that, so we'll go and have a quick look at West Texas Intermediate oil. Okay, so oil reached our target last week above 62, and it's come back to just a trade just a little bit below 59. The dailies now look a little bit toppish. The resistance was met, as you can see on the charts. We tried to break above it. I still think we can possibly go higher yet. I think we can possibly see 65 down the track, but in the meantime, this is a weekly chart, but you know, as you can see, the indicators are positive. Right now though, I think we can possibly come back, maybe to test even the top of this previous channel that we were in. That's still around 55 bucks. The dailies look a little bit heavy, and the 4-hour charts also are pointing lower. So if we were to come back here, we've got this FIBO level here at sort of 55.5. I'd be looking to buy it there for the next leg up, but I'm not in a hurry. I wouldn't be in a hurry to sell it here, because I think the greater trend is higher. But right now, it looks as though, to me as well, we could test slightly lower levels. Okay, so that's about it. Actually, the last thing we'll go and have a look at is copper. Now, after at the beginning of the pandemic, down to March 2020, copper traded down to, well, basically under 2. It's now trading at 4.10. And I think that's a big sign of where the economy is going in 2021. Now that's going to be very supportive of the Aussie, I think, but the indicators, the weekly indicators, show that there's further to go. We have this high up here, 465. I guess that's a potential target. It's not something to trade, but it's something to keep an eye on though. And like I say, I think it's a sign of the way the economy is going to bounce back from the pandemic, and like I say, the Aussie should be a key beneficiary of this. Okay, so that's about it. We'll have a quick look at the calendar. Okay, so Monday's going to be somewhat thin. We've got the Chinese interest rate setting and the German IFO being the main things on the agenda. UK Prime Minister Boris Johnson will be speaking, as will Christine Lagarde from the ECB. That's about it. There's some Dallas Fed data, but there's not much else on Monday. Tuesday, as I said earlier, we've got the UK unemployment and the EU CPI figures, some minor details out of the States. Wednesday, we've got the RBNZ meeting will be the main event of the morning, and then later on in the day, we've got the German GDP, and then Jay Powell will be testifying to Congress, along with a couple of Fed speakers as well. Thursday, not an awful lot to go on until we get to the durable goods orders, pending home sales later in the day, and then Friday, it's all rather thin again until the US get in, when we've got the goods and trades balance, the PCE numbers, and some the RM, the Michigan Consumer Sentiment Index. But that's about it. There's not an awful lot out this week, but there's a few things that might push the market about. I think overall, though, it's going to be progress in the vaccine and pandemic news that's going to push the market one way or the other, particularly and the main event of the week is probably like to be Jerome Powell's speech to Congress on Wednesday. So that's about it. Have a very good week, and we'll talk to you next week. Cheers.